if Musk is talking a great talk, comes down to walking the walk. And that's really the issue in terms of numbers. And the street really, for 2Q numbers, and especially second half, that's going to be an Everest-like battle for them to hit. And I think that's really the issue here. It's a prove me story, but there's a lot of wood to chop ahead. And I think even though last night was optimistic, the street continues to be negative on them hitting that year-end number.
Joe, when he says there's no demand problem with the models, should investors take him at his word?
I'm not sure they should take him at his word, but I think if you look at the way the stock's acting, people are realizing that the first quarter was not really demonstrative of demand, and that what we're seeing now is perhaps a little more demonstrative. I think certainly the company still faces challenges. I'm not quite sure that I agree that we're talking about an Everest-like challenge here. If you look at where they are now, come in at 90,000 units plus for the second quarter, I think the full-year targets are easily achievable, which is why the stock has rallied.
But Joe, you haven't outperformed, but you just cut your price target a little bit. Is that right? Why have you done that?
Well, to be honest, I try to be intellectually honest. This is a high-growth name with high multiples, and I've been very consistent about saying that I think it should trade on 15 times next year's EBITDA. I cut that number a little bit, and so the share price target comes down. But gosh, $347 from where the stock is right now is still a pretty good return, I think.
Who are you siding with, Josh?
So talk about the too hard pile. I guess I'd love to hear either of your takes or both of your takes. Let's say we take production of the cars off the table and we say they'll come in at the consensus range. What about $14 billion in debt and long-term liabilities, number one? And number two, what about the revolving door of executives? Because if you talk to the people that are battling it out over this name all day long on social media, et cetera, those are the issues that continue to come up and I think cause the most amount of consternation after Elon's personal behavior.
Sure. May I go first? Sorry.
I think the taller of you go first.
Yeah. Okay. Thanks.
We don't judge like that on Closing Bell. No.
Yeah. I think you've got to unpack the points there a little bit. It's entirely legitimate to point out that there has been a revolving door of executives, but I heard you refer to social media. As far as I can tell, most people on social media don't do cash flow analysis, because if they did, they would see that the schedule of debt, when it's coming due, what the company's generating, should allow them to repay it. So part of what's going on here as the stock has fallen down is to be honest, there's been a lot of off-the-cuff analysis in social media that I don't think is very good, although I do agree that Elon's management style is a problem. Sorry to jump in there.
Look, I strongly disagree with that. It just comes down to the math doesn't lie. If you look at numbers for the year, better chance of me playing for the Raptors and then hitting those numbers for the year. And that's the fundamental issue here, that the street sees that. And you got the debt. That continues to be the albatross around their neck. And it comes down to profitability. Because right now, if you look at the tea leaves last night, profitability second half seems like that's going to be a big challenge. And that's why right now the street's putting those sort of dynamics together. And that's the issue here for Tesla, why it's going to be, in our opinion, a very, very challenging period for them to get through.